Okay, all you experienced homeowners out there, you can just probably skip this video. I am making this video for my friends who are totally new to the home buying scene and they need some help with the basics. This video, I'm gonna start this off with a quick story time, true story. For some reason, this memory is just like cemented into my brain. I clearly remember sitting in business class at University of Washington. I was probably like 20 years old. And we were like going around the room talking about what we wanted to do after graduating from business school, blah, blah, blah. And the student next to me said that they wanted to be a mortgage broker. And I remember being like, you're way ahead of me because I don't even know what that is. Didn't know. I knew about the home buying process. My parents were homeowners, but I had no understanding of what it meant to get a mortgage. Well, I knew what a mortgage was. I didn't understand what a mortgage broker was. I didn't understand that process. And I just think now like how powerful that information could have been at that time. You see it all the time now with YouTube and everything on the internet, like giving out all the information so efficiently about everything. But there's kids now in their early 20s are buying homes and starting their journey to wealth through real estate and investing at such a young age, at a very young age. And if you have no idea how the mortgage works, don't feel bad about it. Let's fix it. That's the purpose of this video. Thank you for watching. I am a realtor here in Coeur d'Alene, Idaho, North Idaho. I have been selling homes full-time for 10 years. I am married. I have 4 kids. They're all elementary school age, and I really do. I love what I do. I love helping people make their dreams come true through home ownership. If you are thinking about making a move to North Idaho, or within North Idaho or out of North Idaho, whatever it is, call me. I would love to help you in any way. That's why I make these videos. Also, I'm making a new video every week, so make sure you hit that subscribe button and turn the bell on for notifications so that you don't miss a video. If you are ready to start looking at homes, you can check out my home search website, which is searchhomesnorthidaho.com. I am happy to set up a search for you, or if you want to just browse to your heart's content, you do that. You won't have to worry about your information being sold to like 100 different websites and then having realtors calling you every day wanting to talk about your home search. Okay, in this video, we are talking about the top 10 questions that buyers ask about mortgages. Let's just dive right in. 1, what is a mortgage? A residential mortgage is a long-term loan, usually 15 or 30 years in length, that's provided by a bank, credit union, or other financial institutions secured by the property the buyer is purchasing. If the buyer defaults, aka they are not making payments in a timely fashion, the lender can start foreclosure proceedings to force the payment of the debt via selling the property. Question 2, how much can I afford to borrow? This depends on your income, your credit score, your debt to income ratio, and the down payment amount. The monthly mortgage generally, like kind of rule of thumb, should not exceed 28% of your gross income. So that's before tax. Also, your total debt payments should not exceed 36% of your gross income. If you want to know more about this without talking to a lender, I do have a handy dandy calculator to share. I'm going to link that down below in the description. And keep in mind also, if you are self-employed, it's a tad bit more difficult to qualify for a loan versus being a standard like W-2 hourly or salaried employee. Question 3, what are the most common types of mortgages? There's quite a few of them. We have FHA, which is Federal Housing Administration. There are VA loans, which are Veterans Affairs loans, and also USDA loans. Those are the Department of Agriculture loans. Those are all government-backed loans. They give you different types of down payments, interest rates, repayment terms, and eligibility standards. There are fixed rate mortgages, which are typically 15 or 30 years in length, and the interest rate is locked for the entire term of the loan. And there are also adjustable rate mortgages. The rates on adjustable rate mortgages can adjust after 3 years, 5, 7, 10 years, based upon the term that the buyer selects. The advantage of an ARM is that you get a lower interest rate up front, and in return, you give up the stability of a fixed rate mortgage that never adjusts. So at some point, that lower rate is going to go higher. I had buyers a couple of years ago that did an adjustable rate mortgage, and it was the first 9 years was at like 4.5%, I think. And then year 9, it changes. And so you have no idea what it's going to change to. So my buyer was like, well, then I will refinance or I will move before it adjusts. Another kind of loan is called a HELOC. I say that word all the time and I forget that people don't know what it means. It's a home equity line of credit. And that's like when you already have a loan on your house and then you've watched your equity increase and now you're taking out a line of credit on the equity of your home because maybe you want to do a kitchen remodel. Maybe you want to pull that money for a down payment for a rental property. There's like a billion reasons why you would want to do a HELOC, but that is another option. And I have before done a video on a first lien HELOC mortgage. I'm going to link that here. There are also interest-only loans. In an interest-only loan, none of the principal is paid down. Consequently, most interest-only loans either require a balloon payment where the entire principal, all of it, must be repaid at the end of the loan, or the loan shifts to being fully amortized after a period of being interest-only. We also have jumbo loans. A loan is considered jumbo if the amount of the mortgage exceeds loan servicing limits set by Fannie Mae and Freddie Mac, which right now it's like $726,000 for a single family home in most states. Jumbo mortgages are available for primary residences, second or vacation homes, and investment properties. And they're also available in a variety of terms, including fixed rate mortgages and adjustable rate loans. So if you want to borrow more than $726,000, you would be in jumbo territory. A jumbo loan will typically have a higher interest rate, stricter underwriting rules, and require a larger down payment than a standard mortgage. Okay, that was a long one. Question 4. What are the rates for home mortgages? Interest rates vary due to a wide variety of factors, including the type of the mortgage, the term of the mortgage or the length of it, the borrower's credit score, as well as market conditions, including the indices to which the various types of loans are based. A great website to monitor them is mortgagenewsdaily.com. Question 5. How much are the closing costs and fees associated with getting a mortgage? Closing costs are the fees and expenses associated with finalizing a mortgage, including loan origination fees, appraisals, title insurance, and escrow fees. They vary based upon the type of loan and the lender. As a rule of thumb, just estimate 2 to 3% of the purchase price as a starting point to understand what your closing costs are going to be. But once you start talking to a lender, ask that question so that you know before, going in, exactly how much money you're going to need to just close on your loan, not for the down payment. Question 6. What is the difference between a pre-qualification and a pre-approval for a mortgage? A pre-qualification is a document from a lender, usually just based on a conversation stating that the lender tentatively is willing to give you up to a certain amount to borrow for a home loan. This document is based upon some assumptions that are made. It's not a guarantee of a loan offer. There are no financials that are collected or reviewed. Versus a pre-approval is as close as you can get to confirming your creditworthiness, and it includes a review of income, assets, and credit history. A pre-approval letter is an offer to lend you a specific amount of money, and it's usually good for 90 days. Question 7. What documents do I need to get a mortgage? Most lenders require W-2 statements, tax returns, recent pay stubs, bank statements, proof of identification, and other additional documents depending upon your financial situation and the type of the mortgage that you are trying to get. Question 8, how does the mortgage application process work? The mortgage application process consists of several steps. You have pre-qualification, that's where you're just basically having a conversation with a lender about what you're going to qualify for. If you like the lender, if you're serious about buying a home, that's when you go through the pre-approval process. So you're turning in your financials, they're pulling your credit, you're getting that letter, which is like your entry ticket to shopping for homes, right? Once you have the pre-approval, we find you a home, we get you under contract. Once we have that contract document, we're going back to the lender and we're saying, okay, we're ready to apply for the loan. So you'll, at that point, do your loan application, and then it goes through the underwriting process. The appraisal is ordered, title insurance is ordered, the title of the home is reviewed to make sure that that's clear and marketable. Each step involves the collection and verification of various documents and information, and it all culminates in the final loan approval and closing on the property and getting those keys. So the process can take as little as 30 days and sometimes less, but 45 days is probably more common. If there is a problem with the appraisal, if there's a lien on the property that the seller didn't tell you about, if there's a title problem or a different issue, loan approval can take a little bit longer. Question 9, what happens after I get approved for a mortgage? After being approved for a mortgage, you will receive a loan commitment from your lender, and that is a letter outlining the terms and conditions of the loan. You'll then proceed to the closing process, which involves signing a boatload of papers, transferring funds, and ultimately acquiring the property title. So then you're the owner of the property. Many states require the buyer and their agent to attend a closing at the title company to sign documents in person. Question 10, what are some common mistakes to avoid when getting a mortgage? Okay, I've seen this one before. I've learned a lot of lessons from this one. Buyers who do not get pre-approved in advance. They start their home search, start shopping for homes before having the lender pull their credit, verify employment, do all of that stuff. That's a mistake. Don't do that. Another one is failure to reach out to a mortgage professional to determine exactly how much they qualify for. So a lot of people just use a little calculator online. They're like, oh yeah, no, I can borrow $575 without fully investigating and having a lender go through all of those details. And again, it just ends in you get stumped at the end, because if you don't qualify, you don't qualify. Also, starting to talk to a lender early on you have no idea how many loan programs these lenders have. There are hundreds, maybe thousands of different loan programs to choose from. So talk to a couple of lenders, interview them, ask them about down payment assistance programs. They're like little matchmakers. They can pair you up with the right program that's going to fit exactly what you need. Another common mistake is not knowing that closing costs are in addition to the down payment amount. It's not okay, my goal is to save 20% down payment so I don't have to pay that primary mortgage insurance, right? No, you need your down payment, and then you also need another chunk of change for the loan origination fee, title fee, all of that good stuff. If interest rates are rising, another common mistake is failing to lock in your interest rate for 60 to 90 days when you first apply for the loan. So if you start shopping for homes in this current climate, rates are around 7%. So if we were, 6 months ago when rates were raising, it would be a good idea to lock in early, right? Right now, people are more waiting for them to come back down. So this should just be a conversation and understanding what the climate is for rates so that you can make sure that you're getting the best rate possible. Another common mistake, especially for people who are on a longer timeline to buy a house, is a lack of understanding about how credit scores impact your interest rate and the ability to qualify for a loan. So if you're I'm going to buy a house in a year, 2 years, we don't need to talk about my home search. We should talk about it, because what's your credit score right now? Because there's a lot you could do between now and then to get your credit scores as high as possible, which is going to get you the best rate possible. I believe that the highest bracket for credit scores is 780. I will put a note right here if I'm incorrect about that. It used to be 740. I think it went up to 780. So if you're above 780, don't worry about it. You're already golden. You're going to get the best rate. But it's always good to start talking to a lender early and figure out what you can do to prepare to get the best financing scenario possible. Maybe it has to do with your debt to income ratio, and if you can really work on paying off that car to lower the ratio so that you can borrow more, that would be worth it. Okay, this is a big one. A very common mistake is when a buyer makes an unnecessary purchase when they're under contract. This could include buying furniture or other items for their new home. And if that negatively impacts your ability to close on the loan, it can kind of blow everything. I had a buyer once very early on who bought a Harley prior to closing and then didn't qualify for his loan. So don't do that. When you're shopping for a home, all other purchases stop. Okay, that's it for today. There's my intro to what is a mortgage, top 10 questions. Reach out anytime if you do have questions. I'd love to talk to you about your home search or your goals for being a real estate investor, whatever it may be. My phone number and my email address are in the description down below, and I'll talk to you soon.